The housing market just changed dramatically. New data shows that inventory of homes for sale has surged 25% year over year. And today, we're exposing the top housing markets that are crashing right now. We're seeing some of America's hottest housing markets completely flip, with homes sitting on the market longer and prices starting to fall. From New York to the West Coast, buyers are finally starting to get some power and making a lot of sellers nervous. In the next few minutes, I'm going to show you exactly where these crashes are happening and what it means for 2025. Hey, if you're new to the Housing Nerd, welcome. My name is Jason Ferrier. I've been grinding in Central Ohio as a realtor and investor for the last 7 years. I'm very thankful that you've taken the time to watch this video. I hope you get some insight and value. Let's dive in with the first market that's crashing right now. For this video, I'm going to use Resi Club analytic data. If you don't know who Resi Club is, you're missing the boat. You need to go to my description, look for the Resi Club link, and sign up. So the first metro we're going to look at is Cape Coral or Fort Myers, Florida. And how this works, folks, is you're going to see at the top here, it says the shift since local 2022 peak down 10%, meaning a home on average purchased in 2022 when home prices hit their peak, whenever that was in 2022. And they say 2022 because many markets hit their peak at that time, not all, but a lot of them. A home now is worth 10% less versus the peak in 2022. And then they actually show you the 1 year change, right? 6.4%, 2 year change down 6.7%. So no doubt Cape Coral, Fort Myers is definitely falling when it comes to home prices. And look at the inventory shift at the bottom. This is an awesome addition from Resi Club. Inventory shift since December 2019, 45%, meaning they have 45% more homes for sale than they did pre-pandemic. So let's look at another metro in Florida. Bradenton or Sarasota, very similar trend, down 10% since the peak. 1 year change down 6% in prices, down 6.5% in 2 years. You have to go all the way back to 3 years before you had price growth. And look at the active inventory for sale, 8,000 units. That's up 18% since pre-pandemic. Again, more inventory, lower prices, less inventory, higher prices, generally speaking. Hey, a quick interruption to remind you to subscribe to my channel, The Housing Nerd, and hit the like button on this video, and please share it. But whatever you do, comment below. I want to know what's happening in your local housing market. Okay, back to my video and the map. Let's stay down in the Gulf area and look at New Orleans. Home prices in New Orleans down 15% since the peak, 15%. Look at the numbers below that. Look at the 1 year change. Holy Toledo, down 1.4%. That's a big deal when home prices have been skyrocketing, right, nationally, year after year. 2 year change, down 9.4%. 3 year change, 11.3%. 4 year change, down 3.4%. You have to go all the way back to 5 years before you see home price growth, meaning if you bought a home in the last 4 years, it's worth less, generally speaking, than it is right now. Crazy. Now look at the inventory shift, 20% more inventory than pre-pandemic. So now let's go to Austin. Look at this. Shift since the peak, down 22%, call it 23%. Wow. So if you bought a home in 2022, now it's worth 23% less. Look at the 1 year change, down 3.2%. 2 year change, down 10%. 3 year change, down 10%. You got to go all the way back to 4 years to have growth. 5 years, a 5 year change, you're still up 36%. Not too bad. But look at the inventory shift since December 2019, up 36%. Wow. A lot more inventory in Austin. Comment below. What's happening in your market with inventory? Are you seeing more homes for sale? Less homes for sale? Comment below. Inquiring minds want to know. And so does the Housing Nerd. The next market, a lot of people have this on their radar as far as areas that may decline the most in prices. San Antonio, shift since the local 2022 peak, down 8.7%. Look at the 1 year, down 1.8%. Look at the 2 year, down 5%. So prices there are still dropping year over year. Look at inventory shift. They're up 20% in active inventory in San Antonio versus 2019. And by the way, the circle size is the amount of inventory. So the bigger the circle, the more inventory they have for sale right now. That's what the circle size means. And the colors mean, hey, the red is bad, blue is good. We did Texas, we did New Orleans, did Florida. Let's now go up the East Coast and see what's going on in the Eastern Seaboard. And then we're going to do the Midwest and work our way all the way to the West Coast. All right, Myrtle Beach is next. I have a family member that lives there. What's up, Liz? Shout out to you. I oftentimes have looked at investment opportunities in Myrtle Beach, but they just don't cash flow. Maybe they will if prices come down, but prices in Myrtle Beach have gone parabolic. Look at this. Shift since the peak. They're down 1.3% since 2022's peak. 1 year change down 1%. 2 year change actually up 0.7%. But look at the 5 year change, up 53.9% in 5 years. So it's going to take an insane amount of distress there to crash prices and cause any type of loss from people who bought 5 years ago. And look at the inventory shift. Not that bad. Up 6% only since 2019. And you can see, hence, prices haven't crashed that hard. While we're at it, we're going to look at Charlotte. A lot of people ask me about Charlotte, down 0.2% since the peak. Not that bad. 1 year change, up 1.6%. Okay, so this area hasn't crashed, even though they're down 0.2% since the peak. Look at the inventory. They actually have 4% fewer homes for sale than they did back before the pandemic. See how that works? Okay, now let's keep going north. The purpose of this video is to show you crashing markets, but I'm also going to show you the opposite end of the coin and some markets that are still doing well to kind of give you an idea of, hey, why are some areas crashing and some areas not? A lot of it, again, has to do with inventory. So look at this. Virginia Beach, Virginia. This is a great example. Since the peak, up 8.8%. You can see that right here. They haven't crashed at all. 1 year change in home prices, up 4.6%. 2 year change in home prices, up 10%. Look at the 5 year change, up 42%. They keep chugging along. Look at the inventory, folks. Again, inventory matters, down 44%. One of the things I think you'll pick up is as I go north into the Northeast area, a lot less red dots than blue compared to the South in Florida and the Gulf and in Texas, a lot of red dots. And a lot of that has to do with new construction. So more new construction, a lot lower prices, more new construction, a lot more inventory, a lot more competition for sellers, less new construction, less inventory, less competition, and prices can remain sticky or high. All right, let's move into Pennsylvania because I spot some red in Pennsylvania. Johnstown, PA, shift since the peak, down 17%. 1 year change down 1%. 2 year change, prices are down 13%. I mean, that's a big change. I mean, I'm shocked at this one in PA. Wonder what's going on there. If you're from the PA area or Johnstown, let me know. That's nuts. I don't know what's happening there because look at the inventory. It's actually down 58%. This one really puzzles me. So it's not a hard and fast rule, obviously. There are some areas where inventory is still really low, but prices are actually starting to drop. Let's look at Washington, D.C. You can see shifts since the peak, up 2.9%. 1 year change up 4.4%. 2 year change 8.1%. I mean, the 5 year change isn't extraordinary. It's actually normal. I mean, that's about 6% a year in price growth, which is historically like in line with averages of the US. So the fact they're only up 31% tells me, hey, maybe this is like a stable market. I don't know. But inventory is actually down still 24% compared to pre-pandemic. All right, look at New York. A lot of people want to know what's happening in New York City as far as home prices go. Shifts since the peak, up 8.8%. 1 year change, 6.4%. 2 year change, 11.9%. Again, 5 year change, up 35%. Inventory shift, down 46% compared to pre-pandemic. All right, so one of the areas I want you to pay attention to is Hartford, Connecticut. The reason I'm bringing this up is you got to look at this inventory number here. Look at this inventory number, down 76%. 76% fewer active homes for sale versus pre-pandemic. Unreal, right? Like, that's crazy. Look at the 5 year change in home values, 57% higher. Nuts. So, how have they done since 2022's peak? They're up 16%. Not all areas are crashing, folks. In fact, if you look at the Northeast in general, there aren't a lot of red dots at all. We're going to cover the Buckeye State real quick because I'm from Ohio. We've got the shift since the peak, 2022, up 5.2%. Not extraordinarily high. 1 year change, 3.8%. 2 year change, 9.4%. 3 year change, 20%. 4 year change, 32%, and 5 year change, 49% growth. Now look at the inventory. This is interesting. A lot of people think we're way low on inventory in Columbus and Ohio. Well, we are overall, but we're only down 14%. We're not down 70% like Hartford, Connecticut. Now let's look at Cleveland. And Cleveland's a completely different story. Look at this. Since 2022 in Cleveland, up 9% since the peak. 1 year change up 6%. But look at the 5 year change up 47%. Pay attention to this. Look at that. Inventory in Cleveland is down 46% compared to 2019. Home prices are probably not going to crash in Cleveland anytime soon when inventory is that much lower than 2019. Let's look at Cincinnati now. What do we got? Cincinnati, we've got since the peak up 6.5%. 1 year change, just year over year, we're up 4.6%. 10-year is up 10%. Look at the 5-year change, up 47%. The inventory shift down 29%. So Cleveland and Cincinnati both have less inventory substantially than before the pandemic. Columbus, on the other hand, is kind of creeping up to that pandemic level inventory. It'd be interesting to see if home prices actually start to fall in Columbus versus Cleveland and Cincinnati. We definitely have lower growth in Columbus right now, only up 3.8%. Cleveland and Cincinnati are both up more than Columbus. By the way, be on the lookout for Ohio only updates. I'm going to start doing those on a more regular basis. Okay, so let's find some more cities that are actually down. Look at this. Serberville, Tennessee, down 10% versus the peak. 1 year change down 3.4% in prices. 2 year change down 3%. Look at the 5-year change in value, 60%. A home bought 5 years ago on average is worth 60% more today than it was then. And look at the inventory shift. Look at that. Holy Toledo, up 138% since 2019. So go back to this and look how this changed. 5-year change, we were up 60% in Tennessee. Then 4-year change, only up 37%. But that 4th to 3rd year change was what? That's a difference of 34%. Home prices really came down because we were only up 3.5% if you go back 3 years ago. And then that's when we went negative. And now down 3.4% year over year, but down 10% since the peak. Again, inventory matters. More inventory, lower prices. Got no inventory, got no crash. Got inventory, could have a crash. Nashville's next. A lot of people have their eyes on Nashville. Down 3.4% in home prices since 2022. It's only up 1.7% year over year. 3-year change, 11% higher. 5-year change, 48%, still high. Think about it, right? I mean, a 5-year change, that's dang near 10% a year in average growth in home values. So look at the inventory. Now you're up 14% versus 2019. One of the metros I got my eyes on is Minneapolis, Minnesota. You can see shifts since the peak, down 2.4%. But check this out. Look at the 1-year change, up 2.5%. But look at the 5-year change, only up 27%. So you had areas in Ohio and in Florida and even in Texas where home price growth was up like 40, 50, 60% in 5 years. In Minnesota, only up 27%. So with inventory in Minneapolis, you've got 27% fewer homes for sale than you did pre-pandemic. All right, let's talk about Denver. Down 7.8% since the 2022 peak. 1-year change up 0.8%. That's it year over year. Home prices only growing 0.8%. Look at the 5-year change. I mean, this is like Minneapolis in a way. You're not seeing like exponential home price growth in a market like Denver or Minneapolis like you did in some of these other markets. And so maybe that means prices won't crash. Maybe the markets where prices grew exponentially will crash. Comment below and tell me what you think. Is that an indicator of a crash coming because prices went up so much? I'm not so sure that's the case. But it's interesting to look at and see that some markets haven't exploded in home prices like other markets have. I mean, a 33%, 34% change in 5 years really isn't that insane. Look at the inventory shift, up 15% since 2019. So you got more inventory. Certainly prices look like they're softening, maybe start to fall, but you're definitely down since the peak in Denver. So Breckenridge is next. Look at this. Shift since the peak down 14%. That's a lot. Wow. 2-year change down 4.4%. Look at the 5-year change, only up 37%. Look at the inventory. It's still down 31% since 2019. So sometimes you actually have fewer homes for sale, but prices have dropped. I wonder if they're just completely unaffordable. I don't know. Comment below. Tell me if you know something about Breckenridge and what's happening, why inventory is low, but prices look like they're actually dropping. Now look as I zoom out. Look at this. You can definitely tell as you go west, there's a lot more red than the Midwest, right? Next spot is Jackson, Wyoming. I'm really curious about Wyoming. I had someone on my channel ask me to analyze Wyoming on a previous video, and I was just dumbfounded at the prices there. Look at this. Since the peak, they're only up 3.6%, but look at the 5-year change, up 77%. 77%. But look at the 1-year change, actually down 1%. So over the last year, home prices have actually fallen. That's a good thing for the locals, probably. Of course, they need to fall a ton, probably make a difference. Look at inventory, actually has 16% fewer listings than they did pre-pandemic. My guess is inventory is starting to grow substantially there. That's why you're seeing price softening. All right, let's check out Boise. Look at this. Since the peak, Boise is down 11%. 1-year change only up 2.8%. 5-year change still at 51% in home values. Look at the inventory, down 13%, but it's not down 80% or 50%. My guess is that is starting to gain traction. You're seeing more and more homes listed for sale, and that's driving home prices down. Comment below if you're from any of these cities, including Boise. I want to know, hey, are you seeing more homes for sale or not? Are you seeing prices lower? Let's look at Seattle. Since the peak, down 5.4%. 1-year change, though, up 5%. 2-year change, 7%. I actually heard a realtor in Seattle say that there are bidding wars again in Seattle because of inventory. I mean, look at the inventory shift, only up 3%. So maybe in an area like Seattle, you had a lot of inventory hit the market, but now that inventory is starting to be worked through and, the move-up buyer's gone and inventory is starting to drop again. Hence why you're seeing some actual price growth now. You can see it. 1-year change up 5.1% in Seattle. Look at Portland. Kind of similar story. Down 6% since the peak. Look at the 1-year change, though, up 1.8. 2-year change up 2.8. Look at the 3-year change, up 4. And then if you go to that 4th year, up 18%. So like the delta between these two is 14%. And now the inventory is actually down 2% since the pandemic. All right, Ukiah, California. Let's look at this one. Down 17% since the peak. Holy Toledo. That's a lot. 1-year change down 2. 2-year change down 9. 3-year change down 18. 4-year change down 10. 5-year change down 3. They haven't had home price growth in Ukiah, California in the last 5 years. Blows my mind on that one. Active inventory, I'm not sure it really matters. Down 5%. Man, they haven't had home price growth there for a while. Wonder what's happening in Ukiah. All right, let's look at San Francisco. So a lot of people have been saying, hey, that's going to crash. Shifts since the local 2022 peak in San Fran, down 10%. But look at the 5-year change in home values, only up 21.7%, meaning, you bought a house 5 years ago in San Fran, it's only worth 21% more now. It may seem like a lot, but when you look at the other areas of the U.S., that growth is really nothing. I mean, what's that, 4% a year? Which is on par with U.S. averages, sure, but like a lot of areas have grown 10, 12, 15% year over year for the last 5 years. Look at the inventory shift. Since December of 2019, up 18%. So a lot more inventory in San Fran than you had pre-pandemic. Now let's do Los Angeles. This pricing data is actually pulled from December numbers. The January numbers aren't out yet from Resi Club. So this is going all the way back to December before the fires. Look at 3.1% since the peak for Los Angeles home values. 1-year change, 4.7% year over year in home price growth. Look at the 5-year change, up 43%. So compared to San Francisco, Los Angeles values have actually gone up a lot more. San Francisco was at 27%. Los Angeles, 43, 44% in the last 5 years. Look at the inventory shift since 2019, down 10%. So Los Angeles still has 10% fewer homes for sale than they did back before the pandemic. All right, a lot of people have asked me about Riverside, California. I actually used to live in Orange County. I had a lot of friends in Riverside, California, and saw what happened to them during the 2008 crash. But the shift since the local peak in 2022, 1% up. So not great, right? If you bought a home during 2022 at some point, depending on when you closed, your home now is only worth 1% more. But look at the 5-year change, up 50%. That's what I'm talking about. Like there's some areas only up 27%, like San Francisco. Other areas like Riverside up 52%. A lot of that has to do with the fact that probably in Riverside, not probably, I know, home prices are a lot lower. So people look at that and go, hey, that house is only 5 or 600 or 700 grand versus 1.5 million. So I can afford to pay more. And they do. They bid it up during the pandemic. No big deal. Didn't care because money was free basically. And so they just kept bidding up those prices. They started low. Not a problem to bid them up high versus San Francisco, where you're already starting at $1.5 million. All right. Inventory shift since 2019, down 11%. So you still have 11% fewer listings than you did before the pandemic. I'd watch carefully, though, if that number keeps creeping up and you go past that line in the sand, that 2019 line, you may definitely start to experience some price softening. And you can see, I mean, the 1 year change is only up 3%. So that could continue to soften depending on how inventory goes in Riverside. All right, let's look at Pheonix. Look at this. Since the peak, down 9.2%. 1 year change, down 0.4. 2 year change, 1% up. Look at the 5 year change, still up 52.3%. Look at the inventory shift, up 27% compared to pre-pandemic. So inventory is definitely growing in Pheonix, no doubt about it. One of the areas I'm very curious about is Utah. I just can't believe the prices in Utah, how expensive they are. Salt Lake City, let's look at that one. Since the peak, down 5.8%. 1 year change, only up 2.8%. The 5 year change, up 47, call it 48%. And look at this, inventory levels. You've got 21% more homes for sale than you did before the pandemic. So let's do Las Vegas, which is down 2.5% since 2022's peak. Look at that 5 year change, still up 47%. The 1 year change year over year, up 5.1%. So while they are down since the very peak in 2022, overall prices in Vegas look like they continue to go up. And look at the inventory, down 17% versus 2019. So how do you use all this info to determine if you should buy the next house, sell the existing house you're in? Maybe if you're an investor, if you should buy an investment property in a certain market. Well, I would look at 3 indicators. One, I would look at active listings and look historically and find out how many active listings you had before the pandemic and how many you have right now. Are you actually seeing more active listings or fewer active listings? I would also look at days on market historically, and I would look at new listings. And so you can pull that data by talking to a realtor and having them get really granular on the asset class. In other words, the type of home you want to buy or invest in. Don't pay attention to stuff you're not going to be buying or investing in. That's useless. But pay attention to the asset class you want to buy in. If you want to buy a 2-bedroom, 1-bath house, pay attention to that type of house. Have them pull that granular data in the zip code, subdivision, school district you want to buy in, and then look at that trend and ask yourself, are we seeing more listings, fewer listings? Are we seeing longer days on market, less days on market? Are we seeing more active inventory or less active inventory? And that's going to tell you what may happen to prices as we move forward. That's really what drives it, supply and demand. So get good at that, and you'll be able to figure out what's happening in your local housing market. Now, another aspect to all this are foreclosures. A lot of people are wondering, where are the foreclosures? We're just not seeing a lot. I'm lucky for you, I did a video about foreclosures, and you can check that video out right here.